Good afternoon, traders. This is a live trade recap. I took no trades this morning at the market open. Nothing met my criteria. I'll show you what I was watching and why I didn't take any trades. But first, we're going to go over my hotkey settings. I get a lot of questions about that, even though I have multiple videos about hotkeys. So it's not a bad idea to show them once in a while in these live trade recaps. But if you're looking for my hotkey videos, the easiest thing to do, or any of my videos, is to go to the YouTube Trading Armor homepage, click on this little magnifying glass. That's the search function, and just type in hotkeys or whatever you're looking for, and you'll see that all those videos come up. So let's say if you want to find out about support and resistance, type that in. So whatever you want to find out about on my page, just type it into the search bar, and this will work on any other day traders YouTube channel. We all have a lot of videos. They're hard to filter through, but if you use the search function, you can usually find what you're looking for very quickly. So let's get to the hotkey settings. I have active trade open. I'm going to right click on the active trade and then click on active trade settings. And this is the button that I use 99.9% of the time. This is what you see me use in my live trade recaps. I use this not just for test trading, but even when I trade full position size, I use these settings. The only thing that's going to change, of course, is the quantity. Right now it's set to buy one single share because I'm just test trading. But everything else is going to be the same. The order type is a limit order, and the limit price is the ask price. Why the ask price and not the bid? You see some traders say, oh, I want to buy the bid because it's cheaper. That really makes no sense if you understand what the bid and the ask really mean. So the ask is where the sellers are. It's the price that the sellers are willing to sell their shares at. The bid is the price that the buyers want to buy shares at. So if you try to buy the bid, it's like you're trying to buy from people that don't own the shares. So if you want to make sure that you get filled, you want to buy the ask. How do you see people sometimes get filled when they put in an order by the bid? It's because the ask price comes down to that price. So generally, I'm trying to get in when a 1 minute candle makes a new high. And oftentimes the price just continues higher once that happens. So if I try to buy the bid, then I'm not going to get filled unless the price comes back down and retests a lower level. That's the only way. But if I buy the ask and it doesn't get retested, I know I'm going to get filled on the way up. And I'm going to get filled as long as the price doesn't go higher than 10 cents from where I put in my order. So let's say I'm buying a stock that's $10, just for easy math. That's kind of a cheap stock. But $10, I put in my buy ask, I hit my buy ask hotkeys at $10, when the stock price is at $10, but hey, everybody else does, and the price just shoots up. It goes to 10.05, 10.06. I'm still going to get filled because I have a limit offset of 10 cents. And where does that number come from? Well, I used to use 2 cents, 3 cents, and I used to trade cheaper low float stocks, and that worked out pretty well with those stocks. But now that I'm trading these higher priced mid cap stocks, sometimes the stocks are $30, $50, maybe even more. I go up to $100. So a 10 cent offset really isn't much. 10 cents on a $10 stock is just 1%. So if you're trading cheap stocks, and let's say the stock's at $1 and you get filled at $1.01, I'm sure you're not going to complain about that. That's only a 10% of slippage. And the same thing is true here with this 10 cent offset on a $10 stock. So that's that. The time enforced day, that means that the order can only be executed for the day that you're trading on. If the order goes out, it doesn't get filled, it's only going to last for the entire day. Of course, you can cancel it manually anytime you want to, but if you just walk away and leave that order out there, it could be filled till 4 p.m. Eastern time. If 4 p.m. comes around and the price that you put in the order at doesn't ever get hit, it will not get filled and it'll get canceled. If you set this to good till canceled right here, then the order remains for up to 30 days if it doesn't get filled. Then it gets canceled. So now extended hours, you want to have this set to no if you're trading during the day and you're using a stop loss and take profit order. If you're not using a stop loss and take profit order, it doesn't matter how you have it set. You can set it to yes. If you're trying to trade during the pre-market or the aftermarket, you have to have this set to yes. And then, of course, you can't use a stop loss and take profit order. Now, the stop loss I have set to 10%. Even though this is showing a positive 10%, the negative is built into the fact that it's a stop loss, a stop price. So it's not going to throw the stop loss order up 10% above your entry price. It's going to place it 10% below. The limit price is automatically a positive entry. So that is going to go up with this setting 20% above my entry. And I throw it out there like that. That way, both of those orders go in very far away from where the current price is trading. So if there's a lot of volatility, if the price is chopping up and down, these orders don't accidentally get hit. It gives me a moment to calculate where my profit target is. And if you watch my live trade recaps, you see me always move my stop loss up immediately to where I want it. And then I calculate my 2-hour profit target, and then I move my take profit order down to the appropriate level. So those are my hotkey settings. Hopefully this was helpful. Let's go on and go over the trades I didn't take. And I'll just show you my account page because I always like to do that just for transparency. This little lag that you see whenever I go from the active trade settings, that always happens on this computer, because I think it's because it doesn't have a solid state hard drive, because this computer has a pretty decent processor and 16 gigs of RAM, but it's an older computer and it has a disk hard drive and not a solid state hard drive. My laptop is a slower computer but has a solid state hard drive. It doesn't do that lag thing. So anyway, so here's my account page. It looks like I'm red on the day. That's only because my swing trade on SPXL is pulling back for the day. We're still green on it overall. And I'll show you my actual, I guess, P&L for the day was today, the 22nd. And you can see that all this red, this $1.26 of red, is just from the SPXL. There's no trades because I didn't take any trades today. So let's take a look at my screener. I always like to show you how I pick the stocks. So whenever you open up your screener, so I have like kind of a custom button set for that, but normally you would just go here. I could do the same thing and show you how it might look on yours. So if you just go to the screener and then click on my screeners, here's mine. Whatever screener you use, don't just click on that screener. Click on these 3 little dots, click on modify, and that's the only way that your filters are going to be applied. You saw how the filters moved. So now the filters are applied, and now I organize it by volume, and this is how I look for stocks at the open. And I'm looking for stocks that are moving up, and those would be stocks that are green, like this one here. But generally, I like to see at least 2% or more. And you can see that everything is red today. It was pretty much like that right at the open. So there really wasn't a lot. There was a few stocks. Clove, CLOV was one of them that was green, a decent amount at the open, but it was trading below its 200 MA on the daily chart. And that's a very important criteria that must be met for me to look for a long position. If it's trading below the 200 MA, I just don't even look for a trade. So let's go to the video now. And you can see DQ was green at the open, but it just sold off very quickly. So there were no trades to take there. And then I always mark out once the stock gets past my screener criteria and is trading above the 200 MA on the daily chart, then the next step is to mark out the previous high. That could be the high from the pre-market, the aftermarket, or the previous day. I mark that out. If the price does not break out through that level, then I don't look for a trade. So that's what that yellow line is. And then CCIV kind of did the same thing. And you could, okay, this is an old line, so I haven't moved it yet. So let me just go back a little bit here. So yeah, once I put CCIV in the appropriate level, you could see that it was not trading above its previous high. You can see what happened with DQ. It sold off. It went in the red pretty quick there. And then, just adjusting my stop on the SPXL swing trade. Other than that, there wasn't really a lot going on. I was just watching. A few airline stocks popped up. I think United Airlines and American Airlines popped up. You'll see me put those on the chart in just a moment. So there's United Airlines and its previous high. It was not trading above its previous high, so I cannot look for a trade there. And then American Airlines was the next one, and it just kind of peekabooed over its previous high at one point. This was just it touching the previous high. I only trade till 10:30, so at this point it's getting very late in the day for me as far as trading goes. And you can see what it started to do here. It's my cat. He wants to get in my lap. So as it started to go back up toward that previous high, it was rejected. And then it does break out, but only by 2 cents. And 2 cents on a $20 stock, that's 0.1%. That's not really a sign of strength. And it was getting very late in the day. So I wasn't likely going to take an entry on this. Plus, one of the other things that I'm thinking about on days like this when things are very slow, going back to the screener real quick, I want to see plus 2% or more when these stocks are green, not just letting them be green, because if it's below 2%, it could just be a little chop on the way back down. So I think I'm going to be adding that to my plan as far as my screener criteria is concerned. And American Airlines was not green 2% today. It was only up maybe 0.5% or maybe less than that. And you can kind of see how that translated into what the price action did. It just barely broke out over the previous high, and then it just sold off. The last time I checked, it had not made any new highs. So let's just go back to the charts for a moment here and see what American Airlines is doing right now. So here's American Airlines, and here's the previous high. This is where it broke out by 2 cents, and you can see it never got anywhere near getting over that previous high after that. So anyway, so hopefully this video was helpful to you. Oh, one thing I wanted to remind you of, this is really important because this is what happened today. This is in my trading plan. I blew it up just for this video though. It's always possible there will be no trades to take. It's very important to remind yourself of that every single day. There was a time earlier in my trading on days like this where I would just look for, well, what's the next best thing? If nothing really met my criteria, then I would kind of trade whatever the next best thing was, and almost always those trades would fail. And even if they won, it didn't really matter because nothing met your criteria. But it feels a lot worse when you take a trade and it loses and it wasn't within your plan anyway. So I think that's an important thing to remind yourself of every single day. It's always possible there will be no trades to take. So as always, no matter what, go into every single trade with a plan. If there is a trade to take, stick to that plan no matter what. Take your stop losses, honor your profit target, and in the long run, you should be green. Take care.